We'll go ahead and get started. So again, my name is Megan Blosky, a senior manager here at Henry Warren LLP, and joined today on the webinar with Chow Reese, who is a manager who recently joined our team and firm. So today we will be talking about mastering official donation receipts for income tax purposes. We would like to start with a general reminder that as every circumstance is unique, we do recommend you discuss your specific situation with your lawyer and accountant.
Good afternoon, everyone. Welcome to join us. Today, we will be covering some of the common questions that we see around issuing official donation receipts for income tax purposes, which includes, first of all, we're going to talk about who can issue donation receipts and what information must be included on the donation receipts. Secondly, we're going to talk about how to calculate the advantage received by the donor. Thirdly, we're going to talk about rules around determining the fair market value for non-cash gifts. Lastly, we are going to cover how it may be possible to issue donation receipts for some common fundraising events. At the end of the session, we will have a live question and answer period for which questions can be submitted through the Zoom question function. First of all, who can issue official donation receipts for income tax purposes? So the answers are only Canadian registered charities and other qualified donees can do so. A list of Canadian registered charities can be found on CRA's website, as well as other qualified donees. Other qualified donees include Canadian amateur athletic associations, municipalities. They are also permitted to issue donation receipts, as well as university outside of Canada, etc. It is very important to remember that a non-for-profit organization that is not a registered charity and is not other qualified donee cannot issue official donation receipts for income tax purposes. Donors can only claim a deduction or credit on their tax filing if they receive an official donation receipt for income tax purposes. Most charities, they do set up a threshold for donation receipts to help to release their administration burden. There is no obligation for a charity to issue donation receipts. Therefore, there is no deadline for them to do so. However, if a charity do choose to issue donation receipts, we recommend they do so no later than end of February of the subsequent year to align with most of the T-slip deadlines for personal tax filing purposes. A donation receipt cannot be issued to other charities. Instead, a letter of thanks is often issued to acknowledge the gift.
Next, we will talk about what information must be included on an official donation receipt for income tax purposes. Most organizations will use a template throughout the year to be able to issue their receipts to help with the administrative burden and to help ensure all the information complies with the CRA's website. We recommend that charities review their templated receipts at least annually to ensure they agree with the most up-to-date information required by the CRA. As of the date of this presentation, all official donation receipts for income tax purposes must include the following information. Now, it is a bit of a laundry list, so bear with me. The receipt must include a statement that it is an official donation receipt for income tax purposes. It must also include the name and address of the charity and a unique serial number. The receipt should list the location where the receipt was issued under current regulations. However, the 2024 federal budget, which has not yet been enacted into law, proposes to remove this requirement. The receipt must also include the date the gift was received and the date the receipt was issued if they are different. The full name, including middle initial and address of the donor, must also be included. Again, the 2024 budget proposes to remove the requirement to include the donor's middle name, middle initial, but it will keep the requirement to include the donor's first and last name. The amount of the gift, which is the value received before any advantage is considered, must also be included. If there is an advantage received, the amount and description of the advantage must be included on the receipt. Later on in this presentation, we will go through what an advantage is and how to calculate it. The eligible amount of the gift, which represents the net amount after the advantage is considered, should also be included, and this will be the tax deductible amount or the amount of the credit available. The signature of an individual authorized by the charity to acknowledge the gift should also be included on the receipt. In practice, this is most often the executive director of the charity or a member of the board of directors' signature. The name and the address of the CRA's website should also be included on the receipt. A number of years ago, before COVID, this address on the CRA's website was updated. So if you haven't looked at your receipts in a few years, you will want to confirm that it is the most current website, which is canada.ca/charities-giving. In addition, for non-cash gifts, the following must also be included: a brief description of the gift that was received by charity. So, for example, if you received a painting or a gift basket as a non-cash donation, you would just simply describe it on the receipt. The name and the address of the appraiser, if the gift was professionally appraised, should also be included. However, this requirement is proposed to be removed under the 2024 budget.
Next, we are going to talk about how we can determine a value of an advantage. So, what is an advantage? Advantage is what a donor may receive in return for their donation. For example, the meal portion of a fundraising dinner is the advantage. The value of an advantage must be taken into consideration when determining the eligible amount of the gift for receipting purposes. If the value of the advantage cannot be determined, a receipt cannot be issued. If the advantage is greater than 80% of the gift, then no donation should be issued, as this does not meet the CRA's rule surrounding the intention to make a donation threshold. If the advantage is equal or less than 80%, a receipt can be issued, but needs to follow the split receipting rules. Under the split receipting rules, the amount of the gift, the amount and the description of the advantage received, and the eligible amount of the gift must all be included on the receipt. For example, a donor donates $100 to attend a charity's fundraising event at a museum, which includes access to the exhibits. We must therefore consider the cost of attending the exhibit when determining if a receipt can be issued. A ticket to the museum to access the exhibit normally costs $40. The $40 exhibit cost represents the advantage, which results in the eligible amount of the gift being $60, which is the difference between $100 of a donation and $40 of a museum entrance fee. Does this result in the advantage being less than 80% of the total amount of the gift, which is $80? A split receipt can be issued. When looking at the advantage received as part of a gift, the charity must also consider the de minimis rule, which states that if the advantage is not more than the lesser of $75 or 10% of the value of the donation, it is considered nominal and does not need to be deducted from the amount of the gift for receipting purposes. In the previous example, although the advantage of $40 ticket is less than $75 de minimis rule, however, it is greater than 10% of the $100 donation. Therefore, it is not considered nominal. Therefore, the $40 needs to be deducted from the total donation received before we arrived at eligible amount of the donation. However, if an individual donated $100 to the charity and in return they receive a mug valued at $6, the advantage of the mug should be considered nominal, as it is less than $75 and under 10% of the threshold of the total donation value, which is $10. Therefore, no advantage would have to be disclosed on the receipt, and the eligible amount of the donation would be the full $100 in this scenario.
Now that we've covered advantages, we'll talk about fair market value for non-cash gifts and how you should determine what the fair market value of a gift is. So a fair market value is normally the highest price that a property would bring in an open and free market. Generally, the fair market value of the property, if it is less than $1,000, can be determined by a member of the registered charity or another individual who has sufficient knowledge to determine its value. The person who determines the value of the item donated should be competent and qualified to make this evaluation. A lot of clients will just Google how much an item will cost or look it up on Amazon or another store to help support the value in these cases. If the value is expected to be more than $1,000, the CRA strongly recommends that the property be professionally appraised by a third party. If the property is appraised, the name and address of the appraiser will need to be included on the official donation receipt for income tax purposes under current rules. However, as previously mentioned, the 2024 federal budget proposes to remove this requirement in the future.
Next, we want to talk about gifts of services. It is important to remember that CRA does not allow for the official donation receipts for income tax purposes to be issued for a gift of service. For example, if a lawyer assists a charity to update their bylaws and wishes to do so at no cost to the charity, but instead wishes to receive a receipt for the value of their services, the charity somehow cannot issue a donation receipt for this scenario. However, if a charity pays the lawyer to provide the service, and the service provider, such as the lawyer in this instance, then chooses to donate the money back, the charity can issue a receipt for the monetary donation. This is often referred to as a check exchange. In such circumstances, there are two distinct transactions must take place. Firstly, a person or organization provides a service to the charity and is paid for the service. The entity providing the service would still have to apply HST to the invoice if applicable. Secondly, the second entity then makes a voluntary gift of property, the monetary donation, to the charity. In a check exchange, the charity should ensure they retain a copy of the invoice from the service provider and the payment paid to the service provider and the support for the donation received. The entity providing the service will also need to account for the fee charged as their income, as well as the donation made. A charity should not issue a receipt for a service provider in exchange for an invoice marked as paid, as this does not result in an adequate paper trail to support a donation actually being made to the charity.
We will talk about some of the most common fundraising events we hear from on clients wondering if they can issue a donation receipt in these circumstances. For most fundraising events, an official donation receipt could be issued if the charity so chooses, as long as the following split receipting rules are followed. For auctions, if a charity receives a donation for a silent auction or another fundraising event, the charity can issue a donation receipt for the donated item at its fair market value, as long as it is determinable and the receipting rules for non-cash donations are followed. Furthermore, it might also be possible for the charity to issue a donation receipt for the winning bidder at the auction. For example, if a receipt is going to be issued to a winning bidder, the bid must meet the intention to make a gift threshold set out by the CRA. This requires that the winning bid be at least 125 times the amount of the fair market value of the item in order for it to be considered a gift. As an example, if a donor donates a bike worth $400 to a charity, the charity could issue a donation receipt for the full $400 fair market value of the bike to the donor, as long as they follow the non-cash receipting rules. Additionally, if once the auction has concluded, the winning bid was for $550, which exceeds the 125 times threshold based on the bike's fair market value of $400, which would be $500, the charity could issue a donation receipt to the winning bidder for the value of $125 as the eligible amount. This $150 eligible amount represents the winning bid of $550 less the fair market value of the bike of $400. As there is an advantage received in this scenario, which is taking home the bike, the donation receipt would have to include the amount of the advantage of $400 in a description, which could simply be bike. For fundraising dinners, to issue a receipt for a fundraising dinner or another event that the charity might be throwing, we must first determine what advantages, if any, the participant or attendee would be receiving as part of their ticket price. So in this example, we will consider a fundraising dinner where there's a set ticket price of $250. The advantages received by the attendees at this event would include the meal, which has been valued at $100. The attendees would also receive a pen and an option and the possibility of winning a door prize. We will assume these are valued at a combined amount of $17. However, the total value of the complimentary items, being $17, falls below the de minimis threshold of $75, or the 10% of the total ticket price, which would be $25 in this case, based on the $250 ticket price. Therefore, since $17 is lower than the value of $25 based on the 10% threshold, these advantages are considered to be de minimis and therefore do not need to be factored into the eligible amount of the receipt. At this fundraising dinner, there will also be entertainment, which is valued at $50 for the purposes of the advantage. This brings the total advantage received based on the $250 ticket price to be $150, which includes the meal and entertainment values. As the $150 advantage falls below the 80% split receipting rule, which we can therefore issue a donation receipt for attending this fundraising dinner, of $100, $250 less the $150 advantage, which would have to be disclosed on the receipt for an eligible gift of $100. If instead the total advantage received by the attendee was $225, this would exceed the 80% threshold, which would be $200 based on a $250 ticket price. And therefore, since the advantage is greater than the 80% threshold, no donation receipt would be able to be issued to the attendees. For golf tournaments, another common fundraising event, the advantages received by the golfer or attendee would also have to be considered similar to the fundraising dinner. So at a golf tournament, the advantages received by the golfer who is attending could include the green fee, the cart rental, any food or beverages provided, complimentary items such as golf balls, and any possible prizes that might also be won. The split receipting rules would again need to be applied to determine if the advantage outweighs the 80% rule to see if a split receipt could be issued, and also need to factor in if any of the advantages are deemed to be de minimis. If the split receipting rules are met, the charity could proceed with issuing a donation receipt. Ultimately, as previously mentioned, as there is no requirement in any circumstance for a charity to actually issue an official donation receipt for income tax purposes to a donor, the charity, in the case of fundraising activities, could always choose not to proceed with offering any donation receipts to the participants to help lessen the administrative burden. That brings us to the end of our scheduled presentation. So we will now open up the floor for any questions. The questions can be submitted through the question and answer feature on your Zoom screen. So we have our first question here, which is, do you find charities often issue donation receipts for fundraising events? So in most situations, just to help with the administrative burden and sometimes the difficulties in calculating the advantages received by the participants or them not meeting the 80% rule, most charities, in my experience, do not issue donations for fundraising events, especially concerning the winning bidder of a silent auction. That's the one we very rarely see. But I have seen in several cases in the last couple of years where charities do have more success soliciting donations for auctions or silent auctions if they offer the donor of those items a receipt for that based on the fair market value. The next question is, will this be available on YouTube? So we will let our marketing manager here at the firm answer this one. Josh? No, okay. He may. So yes, this recording will be put up onto our Hendry Warren YouTube channel afterwards, and it will also be there with the other webinars we have currently done to date and future webinars, which I highly recommend you check out. That brings us to the end of the questions. So if you have any other questions or situations you would like our help with, please feel free to reach out to Chow or I, and we would be happy to assist. We thank everyone for attending today and hope you have a good rest of your day.